Hello, everyone. My name is Mark McNamee, and I'm the Director for Europe here at FrontierView. Here at FrontierView, we've just released our Global Events to Watch report for 2023, which looks at a range of disruptive events that could have significant impact on multinationals' plans for next year. Today, we'd like to walk you through just a snippet of those global events through the region-specific events to watch out for in the case of Central Europe. Last week, we published our report on Western Europe, and next week will be the events to watch for CIS region. As a reminder, these events to watch are those significant disruptive events that are not part of our base case expectations for next year. These are things that have a likelihood greater than 10%, so a non-negligible potential, and are important enough that we believe they should be on the radar for senior executives and monitored as part of risk mitigation for next year. In some cases, of course, it makes sense to build contingency plans for these events if they are, in fact, substantially disruptive to your business. Every year, just to be sure, some of these events, if not most, have occurred, the events that we have flagged. And so a word of warning to multinational executives that these are not just hypotheticals and things you should be keeping your eye on. That said, taking a look at the chart you are seeing here, on the x-axis is the likelihood that the event will occur. On the y-axis, how quickly it would impact business. And then the size of the bubble is the relative scale of business impact for multinationals if the event were to take place. So with all of that said, for this coming year, 2023, we wanted to highlight the following events for Central Europe, and I'll hand it off to Martin to begin.
Thank you, Mark. So at one of the highest likelihoods and highest impact, we have government-mandated gas rationing in the EU, which has 35% chance to happen now. We already expect that LNG supplies will be very tight throughout Europe, and in reality, this event is an event that will impact the whole of Europe, and it's also reflected in our Western Europe events to watch. The main point here is that what we're talking about here is much tighter supplies, prompting the government to have to hard ration gas supplies, prioritizing households, essential services, and giving much less flows to industries, having a massive impact on output and resulting in an acute recession.
And one of the other risks that we are looking at for the region as a whole is the potential that we'll actually see a deeper recession in Western Europe than the one we have currently forecast. This would be bad news for Central Europe because it would translate into lower external demand. It would also have an impact on industrial production in Central Europe, given the fact that many Central European economies are quite tightly integrated into Western European supply chains, having the combined impact of lower economic growth in 2023 for the region.
And talking about some market-specific events, so we have both Poland and Hungary losing access to EU funding. Now, those are two separate events, and they have a different impact on the broader region. We have Hungary at 30%, Poland at 25%. Both of them really reflect the European Commission's concerns over the rule of law and the independence of the judiciary and anti-corruption reforms. Now, as a base case, we do expect that both countries will be able to access both cohesion and recovery funding. Now, should Hungary lose EU funding, this will exacerbate the already substantial fiscal pressure that the market's experiencing, will result in a much sharper recession, and it will impact markets, especially in the Western Balkans, through trade channels. In the case of Poland, even though the likelihood is slightly smaller, the impact will be a bit bigger. And this has to do with the fact that the Polish market as a whole is substantially bigger and will have a much bigger weight on overall output in the region, and will impact neighboring markets quite substantially. Staying on the topic of Poland, we also have somewhat of a more positive event, and this is the opposition being able to present a united front and actually win the elections in autumn of next year. Now, this comes in light of the fact that the ruling PiS has actually lost some popularity, and in this case, we will likely see a bit more policy predictability, a softening of the existing tensions between Poland and the EU, which should ensure continued access to funding, and just a bit more of a boost to investor sentiment as well.
Now, in terms of some good news for the region, we do, one of the possible events that we're highlighting is that Croatia actually experiences a stronger than anticipated tourism season. And there are a couple of reasons for this. The first has to do with the fact that Croatia is adopting the euro in 2023. Also the fact that Croatia is a cost competitive location for many would-be vacationers. And the third has to do with the fact that the euro is going to continue to be weak relative to the US dollar, and that could encourage more US tourists to flock to Croatia's sun-drenched beaches next year. In terms of a more negative event that we're highlighting, Romania could potentially see the disintegration of its coalition in 2023. Now, this coalition has outlived what has survived rather longer than many analysts had anticipated, and this has to do with the fact that the two parties that are part of the coalition are not natural governing partners, but also that Romanian governments tend not to actually fulfill the entirety of their mandates. Now, the reason we think that there's a possibility that this coalition could disintegrate has to do with the potential that the cost of living crisis could exacerbate tensions. The impact would probably result in the PSD, which is a conservative party, forming another coalition with some smaller parties. This would not be good news for Romania, given the PSD's very negative reform track record, and could have a deleterious effect on business and investor confidence in Romania.
And finally, we should note that while we are considering the potential impact of a broader spillover of the war in Ukraine, especially in the Baltics, this is something that we've covered in our global events to watch and falls under the direct NATO-Russia confrontation, hence not covered here. But talking about the impact of the war in general, we do see a risky but also potentially both positive and negative event in the increased refugee flows from Ukraine event. And really, we are already expecting to see increased refugee flows as the war in Ukraine continues to intensify. So what we're talking about here is potentially higher than expected flows, which might be a result of much higher intensification of the war itself, or the use of a non-conventional weapon by Russia. In this case, the increased refugee flows will have a very similar effect to what we've seen at the beginning of this year, meaning a statistical increase in domestic consumption, an increase in the addressable market for MNC, especially when we talk about B2C demand. However, the fact that we might see this increased refugee flow means that governments in the region, especially in the Visegrad, Baltics, and the Baltics, will actually see substantially more budgetary pressures as they try to accommodate these refugees, which will prompt the need for a longer-term correction, considering that fiscal deficits will increase substantially.
Okay, and just to clarify, this would have an impact specifically in Poland to the largest extent, and we would see some increase in some consumer spending and potentially business demand as well as a result of that event. Great, thank you very much for your time, Katrina and Martin. For more information or a detailed walkthrough of any of these events, please contact your client relationship director. And if you haven't yet, please do take a look at our Global Events to Watch report on the portal. Thank you for your time. Have a great rest of your week.